Hey everyone, ready for another deep dive? Today we're tackling something super important, disability income insurance. We've got excerpts from a study guide to help us break it all down.
Yeah, there's a lot to cover, but don't worry, we'll make sure you get the most important info.
Think of it like building your own disability income insurance armor.
Right. I like that. It's about understanding your options and finding the right fit for your needs.
Okay, so first things first, why should we even care about this stuff? Accidents happen, people get sick, yeah, but why disability insurance specifically?
Well, it all comes down to protecting your most valuable asset, your ability to earn a living. If you can't work because of an illness or an injury, disability income insurance is there to help cover those costs.
Right, because those bills don't just stop, right? Rent, food, everything keeps coming, even if your paycheck doesn't.
Exactly. And honestly, the financial impact of a disability can be way bigger than a lot of people realize.
Okay, so we get it. The stuff is important. But let's talk about the word disability itself. It's not always as simple as it sounds.
Right. Different policies have different definitions, and some are definitely better than others.
So what are we looking at here? What are the key things to understand?
One of the most important distinctions is between own occupation and any occupation coverage.
Okay, I've heard those terms before. But remind me, what's the difference?
So own occupation is kind of like the gold standard. It means that if you can't perform the duties of your specific job, you're covered, even if you could theoretically do some other kind of work.
So let's say a surgeon can't perform surgery anymore, but they could, I don't know, maybe retrain for a different medical specialty. They'd still be covered under own occupation.
Exactly. Now, any occupation, on the other hand, only covers you if you can't work at any job that you're reasonably qualified for, which is a much tougher standard to meet.
Ah, okay. So it's a lot broader. So does that mean own occupation is always the better choice?
Well, it depends. Own occupation policies usually come with higher premiums because they offer more comprehensive protection.
Right, because the insurer's taking on more risk, I guess. Okay, that makes sense. Now, this study guide also mentions a combination definition. What's that all about?
Yeah, a combination definition might start with own occupation coverage for the first 2 years of a claim, but then after that, it switches to any occupation.
So it starts off strong and then gets a bit stricter. Interesting.
Exactly. It's like a safety net with a time limit.
I see. Okay, so we've got these different definitions of what actually constitutes a disability,
Right.
but there's also this thing called the loss of earnings test, right?
Right. To qualify for benefits, you have to show a genuine loss of income, not just an inability to work.
So someone who is, say, independently wealthy and chooses not to work wouldn't be eligible for benefits, even if they had a medical condition preventing them from working.
You got it. And it's important to remember that earned income refers specifically to money you make from working, not passive income like investments or, rental properties.
Oh, that's a good distinction. So it really is about replacing your paycheck, not just supplementing other sources of income. Okay, got it. So are we ready to move on to types of disability coverage?
Let's do it.
All right, I think most people know the basics, short-term versus long-term. But can you break down those key differences for us?
Sure. Short-term disability is kind of like a Band-Aid solution. For temporary disabilities, lasting maybe a few weeks or months, it kicks in pretty quickly after a short waiting period.
So if you'd like break your leg and need some time to recover, that would be short-term.
Exactly. Long-term disability, though, that's for more serious situations that prevent you from working for, much longer periods. We're talking years or even until retirement.
And the benefits usually replace a bigger portion of your income with long-term compared to short-term.
Yep. Often up to like 60% or even more, depending on the policy. And the waiting period is usually longer, too. Maybe 3 to 6 months, sometimes even longer.
Okay, makes sense. Now, this study guide also mentions some less common types of disability coverage, like partial or residual disability. Have you ever heard of these?
Yeah, those are important ones. They cover situations where you can work, but not at your full pre-disability level.
So it's like it encourages people to return to work without the fear of losing all their benefits, right?
Right, exactly. Partial disability kicks in if you can only work part-time or in a modified role because of your disability. And residual disability focuses more on your loss of income, even if you are working full-time.
So, like, if someone could only work half their usual hours, they'd get half of their total disability benefit.
Yeah, something like that. It just shows how disability insurance can really adapt to different situations.
Okay, I'm starting to see the nuances here.
Yeah.
Now, this one I have to ask about. Presumptive disability. It sounds almost too good to be true.
I know, right? Basically, if you have certain severe losses, like loss of sight or hearing or two limbs, you're automatically qualified for the full benefit, no questions asked.
Wow. I guess with losses that serious, it's pretty clear you're not going to be able to work the same way you did before.
Exactly. No need to go through a long evaluation process or anything.
Okay. So we've talked a lot about private disability insurance, but I know there are also government programs like Social Security Disability Insurance or SSDI and workers' compensation.
Right. Private insurance isn't your only option.
So can you give us a quick rundown of how those work?
Sure. Let's start with SSDI. To qualify, you have to have worked and paid Social Security taxes. And you need a disability that's expected to last at least a year or, result in death.
So it's not for temporary situations. And what about the benefit amount? How much can someone expect to receive?
It's based on your average lifetime earnings, so it really varies. And there's a 5-month waiting period before the benefits actually start.
Got it. And workers' compensation?
Workers' comp is a state-run program, specifically for work-related injuries or illnesses. It covers medical expenses and lost wages, and unlike SSDI, there's no waiting period.
Oh, that's a big difference. And workers' comp takes precedence over any private disability insurance you might have, right?
Absolutely. It's a primary coverage for workplace disabilities.
Okay, so we've got these government programs as a foundation, and for a lot of people, that's not enough. They need something more. So that's where individual disability income insurance comes in.
Right. It's like that extra layer of protection tailored to your specific needs.
Exactly. And that's what we'll be exploring in more detail next. So when it comes to individual policies, what are some of the key things people should consider?
Well, it's important to remember that insurers assess risk based on your occupation, your health history, all sorts of factors.
So someone with a desk job is probably seen as less risky than, say, a construction worker.
Right. And someone with a history of, back problems might face higher premiums or maybe even be denied coverage.
It's all about assessing that individual risk. But this type of policy provides 247 coverage, right? Not just for work-related incidents.
Exactly. It covers you no matter where or how you become disabled.
Okay, that's a major advantage. All right, so let's get into the details of individual policies. What are the key elements someone should be looking at?
Well, one of the biggest ones is the benefit period. That determines how long the policy will pay out if you become disabled.
So there's a big range there, right? From a few months to potentially your whole working life.
Exactly. And of course, the longer the benefit period, the higher the premium.
Makes sense. You're buying more coverage, so it costs more. All right, then we got the elimination period, right? Which is basically the waiting period before your benefits start.
Yep. Think of it like a deductible. The longer the elimination period, the lower your premiums will be.
Okay, so you're taking on more of that initial risk yourself, so you get rewarded with a lower cost. I get it. But wait, there's also something called a probationary period, right? How is that different?
Good question. The probationary period is usually just a short time at the beginning of your policy where you're not covered for disabilities that arise from illness.
So it's to protect the insurer from claims related to pre-existing conditions.
Yeah. Right. So if you have a heart condition when you apply and then you become disabled because of that heart condition during the probationary period, you're not covered.
Okay, so it's like a grace period for the insurer. But the probationary period usually doesn't apply to disabilities caused by accidents, right?
Exactly. So if you break your leg during the probationary period, you're still covered. It's really about managing risk related to pre-existing health conditions.
Okay, that makes sense. All right, I think we've covered a lot of ground here. We've got a good understanding of the basics now. Should we take a break here and come back for round two?
Sounds good to me. We'll pick right back up and dive into even more details about individual disability policies.
All right, back for more on disability income insurance. Last time, we covered a lot of ground, right? Different definitions of disability, types of coverage, government programs. Phew.
Yeah, it's a lot to take in.
But it's important stuff.
Yeah.
So let's keep going, shall we? We were about to dive deeper into individual policies, right?
Right. We were talking about some of the key elements to look at, like benefit periods, elimination periods.
Okay, right. But before we go there, what about how those benefits are actually calculated? There are a couple of different approaches, aren't there?
Yeah. You've got percent of earnings and flat amount.
Okay, break those down for me. Percent of earnings, well, I think I get that one right. Your benefit is a percentage of your pre-disability income.
Exactly. Usually it's like 60% or 70%, and that's often what you see with group disability plans, where your benefits directly tied to your salary.
Okay, that makes sense. So flat amount means you just get a specific dollar amount no matter what your income was before.
Yep. Like maybe you choose a benefit of, say, $5,000 a month. That's more common with individual policies.
Okay, I see. And remember that elimination period we talked about. That comes into play here too, right?
Oh, for sure. That elimination period acts like a deductible, so it's going to reduce the total benefits you end up receiving.
So say you have a $5,000 monthly benefit and a 90-day elimination period, and you're disabled for 6 months. You're only going to get benefits for those 3 months after the waiting period.
Exactly. You'd get $15,000 total, not $30,000. So that's definitely something to keep in mind when you're comparing policies.
That's a really good point. It's not just about that monthly benefit amount. It's about the overall payout over the whole disability period.
Exactly.
Okay, got it. So are we ready to talk about the premium rates? I have a feeling this is where things get a little complicated.
Well, it's where things get personalized, that's for sure.
Yeah. So what are the main factors that affect how much someone is going to pay for disability insurance?
Well, we've already talked about the benefit period and the elimination period. Those have a big impact. Longer benefit period, shorter elimination period generally means higher premiums.
Makes sense. But it's not just about the policy itself. It's about you too, isn't it?
Yeah, your age, sex, income, health, even your occupation, it all plays a role. Younger, healthier people usually pay less because statistically, they're less likely to become disabled.
And I'm guessing women might pay a bit more because they tend to have more disability claims on average.
That's right. And of course, your income matters too. A higher earner usually needs more coverage, which means higher premiums.
Okay, that's all pretty logical. What about occupation? We touched on that a little earlier, but how does that fit into all of this?
Oh, occupation is a huge factor. Think about it. A construction worker faces different risks than someone who works in an office.
Right. Some jobs are just more physically demanding, so that can mean higher premiums.
Exactly. And, the study guide mentions how physicians and attorneys tend to be lower risk. Their work isn't as physically demanding, and they have a strong incentive to get back to work because of their earning potential.
Interesting. It's like a whole puzzle, all these different pieces fitting together. Okay, I think we've got a good handle on those basic factors. Are we ready to tackle the fine print now? Policy provisions and all those riders.
Let's do it.
This is where things can get a little confusing, right?
Yeah, but it's important to understand these details. They can have a big impact on your coverage.
Okay, so lead the way. What are some of the key provisions and riders we should know about?
Well, one provision that's worth highlighting is the relation of earnings to insurance clause. Basically, it prevents you from receiving more in disability benefits than you were making before you became disabled.
So no getting rich off of being disabled. It's about replacing lost income, not creating a windfall.
Right. Exactly. It keeps things fair. Now, let's talk riders. Think of these like customizing your insurance armor, adding that extra protection.
Okay, I like that. So which riders are the must-haves and which ones are just nice to have?
Well, that really depends on your situation. But one that can be super helpful, especially if you have pre-existing conditions, is the waiver for impairments rider.
Okay, that one sounds important. Tell me more.
Sure. This rider lets you exclude certain pre-existing conditions from your coverage. So, let's say you have a history of back problems. You might be worried that a future disability related to your back won't be covered, right?
Yeah.
So the waiver lets you exclude back issues, which can make it easier to get approved for a policy. And you're still covered for other conditions.
That's a really smart strategy. It helps people get coverage even if they have some health concerns. But wouldn't that make the policy cheaper too?
You got it. The insurer is taking on less risk so they can offer you a better price.
Okay, that's a win-win. So what other riders should we be thinking about?
Another really valuable one is the rehabilitation benefit. This one helps you get back to work after a disability. It might cover things like physical therapy, vocational training, even job search assistance.
I hadn't really thought about that before. It's great that some policies actually help you regain your independence.
Yeah, it's not just about paying out benefits. It's about supporting your recovery.
Absolutely. This study guide mentions a whole bunch of other riders, but I think there are two that we definitely have to talk about. The Social Security rider and the future increase option rider.
Agreed. Those are both the big ones. So the Social Security rider coordinates your benefits with any Social Security disability insurance, SSDI benefits you might receive.
So it prevents you from getting double payments, right? from both your private policy and SSDI.
That's part of it. But it can also help you reduce your premiums because you're shifting some of that coverage over to SSDI.
Oh, I see. You might choose a lower benefit amount on your private policy, knowing that SSDI will kick in later.
Exactly. It's about customizing your coverage and maybe saving some money on those monthly premiums.
Okay, that's really smart. And what about the future increase option?
That one, also known as the FIO rider, is especially valuable for younger people. It basically gives you the option to increase your coverage as your income grows without having to go through a whole new medical underwriting process.
So even if your health changes, if you get a big promotion down the road, you can still increase your benefits to match your new income level.
Exactly. It protects you from becoming uninsurable later on.
Okay, that's a great way to put it, like future-proofing your disability insurance. Now, before we move on to group disability insurance, there's one more rider I wanted to mention, the cost of living adjustment rider, or COA rider. With inflation being what it is these days, that one seems pretty important.
I agree. It's all about protecting your benefits from inflation, so those disability payments keep pace with the rising cost of living.
So if inflation is, say, 3%, your benefits would increase by 3% each year.
That's the general idea. It's usually tied to the consumer price index, so your benefits would adjust based on changes in that index.
Okay, so even if your income stayed the same, your benefits would gradually increase over time to keep up with the cost of, well, everything.
Exactly. That's important because even a small amount of inflation each year can really erode the value of a fixed income over time.
Right. Imagine becoming disabled today and receiving the same monthly benefit for the next 20 years. That benefit's going to be worth a lot less 2 decades from now.
Exactly. That's why that COA rider is so important. It helps you maintain the purchasing power of your benefits no matter what happens with the economy.
Okay, that makes total sense. We've really dug deep into individual policies now, benefit calculations, all those important riders.
Yep.
But now let's switch gears. What about people who get their disability insurance through their employer? Group plans.
Yeah, that's a whole different ballgame.
Okay, well, let's take a quick breather, then we'll dive into the world of group disability insurance. All right, we're back, ready to tackle the last piece of the puzzle, group disability insurance. I bet some folks are wondering how this works, especially if their employer already offers some coverage.
Definitely. Group disability insurance, the kind you get as an employee benefit, well, it's got its own set of rules and features.
Right, so how do these group plans differ from those individual policies we spend so much time talking about?
Well, for starters, group plans, you can only get them as part of a natural group, like employees of a company or members of a specific organization. You can't just go out and buy one on your own.
Ah, okay, so it's got to be tied to something like that. What about the way the premiums are calculated? Is that different too?
Good catch. It is. See, with individual policies, the premiums are based on your personal risk factors, but for a group plan, it's based on the risk of the whole group.
So everyone in the group pays the same? Even if they have different health conditions or jobs, everyone pays the same amount.
A lot of times, yeah. The idea is to spread that risk across a larger pool of people. Now, some plans might have, tiered premiums based on things like age or salary.
Oh, yeah, I see. So does a certain number of employees need to enroll? Like, for the plan to even be offered in the first place?
Absolutely. Most insurers have a minimum participation level. It's to avoid something called adverse selection.
Adverse selection, what's that?
It basically means they want to make sure there's a good mix of healthy and, well, less healthy people in the group. Keeps those premiums affordable for everyone.
Makes sense. So it's all about balance. Okay, and speaking of things we've talked about before, those elimination periods, those exist in group plans too, right?
Yep, they do. And one cool thing about group disability coverage is that it can be designed to work with other benefits, like sick leave or short-term disability.
Oh, right. So it's like a chain of support, right?
Yeah.
You use up your sick leave, then maybe a short-term disability benefit kicks in, and if it goes on longer, then you finally transition to long-term coverage.
Exactly. It's a way to try to minimize any gaps in coverage.
That makes sense.
Hmm.
But I've noticed, and maybe this is just me, but the terms short-term and long-term seem to be used differently when you're talking about group plans.
Oh, you're right. It can get confusing. But generally, in a group plan, short-term means a benefit period of like 13 or 26 weeks. And long-term kicks in for anything from 2 years to, retirement age.
Ah, so the time frames are a bit different. What about the amount of income they replace?
Another difference, Group short-term disability often replaces a bigger chunk of your income, sometimes even 100%.
Hmm.
But for long-term,
Right.
typically lower, like maybe 50%, 70%.
Okay, so definitely some nuances to keep in mind there. One other thing I've seen is that employers will offer like a base level of coverage,
Yeah.
and then employees can buy more if they want to.
Yeah, that's common. It's like they give you a starting point and then let you customize from there. Like maybe the employer covers 50% of your salary for long-term disability, but you can add on, another 10% or 20% through payroll deductions.
Right, so it gives people more control. Makes sense. Okay, so we've covered individual policies, group plans, but what about the entrepreneurs out there? The folks running their own businesses, they need protection too, right?
Absolutely. Disability insurance can be just as crucial for businesses, especially, small businesses or partnerships. It's all about making sure things can keep running smoothly, even if someone important can't work.
Okay, so how can businesses use disability insurance to their advantage? Give me the strategies.
Well, one way is business continuation. It's basically insurance for the business itself.
So, like, if a key person, like an owner or maybe a top executive, becomes disabled, this coverage helps keep things going.
Exactly. There are a few different types, each with its own purpose. One example is business overhead expense insurance. We call it BOE for short.
Okay, what does BOE cover?
It's designed to cover, well, the overhead expenses of the business if the owner becomes disabled. Rent, utilities, salaries for employees, just the essential stuff to keep the lights on while the owner is recovering.
It's like a safety net for the business, but this doesn't cover the owner's personal income, right?
Right. That's a super important point. BOE is not a replacement for the owner's own disability income insurance. They would still need their own individual policy to cover their personal income. BOE is really just about keeping the business afloat.
Got it. Two separate things there. Okay, so that's BOE. What other ways do businesses use disability insurance?
Disability buyout policies are another one. They're used to fund those buy-sell agreements between business partners. So if one partner can't work anymore, this policy can help the other partners buy out their share of the business.
Ah, okay. So it helps ensure a smooth transition without putting a strain on everyone else.
Exactly. And then there's key person disability insurance. This is for those really valuable employees, the ones who are crucial to the business's success. Maybe a top salesperson, a lead engineer, you get the idea.
So not just owners or partners, but anyone who's considered a key person.
Right. The point is to protect the business from that financial hit that happens if a key person can't work. So the policy pays out a benefit to the business to help offset that impact.
Makes sense. It's all about being prepared, right? All right, so we've explored all these different types of disability insurance. We can't wrap up without talking about taxes, right? I know this part can get tricky.
It can, but it's important. The good news is the way the IRS handles disability insurance taxes, well, there's a clear logic to it.
Okay, good news is always welcome. Let's break it down. What about those individually purchased policies? How are those taxed?
So the premiums you pay aren't tax deductible, but the good news is any benefits you receive, they're tax-free.
Ah, so you pay with after-tax dollars, but then the benefits come back to you without any taxes taken out.
Exactly. Now, if your employer pays for those group disability premiums, well, then the benefits are going to be taxable.
It makes sense, since they can deduct those premiums as a business expense.
Right. And if you're paying for group coverage yourself, like through payroll deductions, it depends whether your contributions are pre-tax or after-tax.
Okay, so pre-tax, like through a cafeteria plan, means the benefits will be taxed. But if it's after-tax, you're in the clear.
Exactly. Now, for business overhead expense policies, those premiums are deductible for the business, but the benefits, those are taxable.
Makes sense. Those benefits are replacing business income, so it's only fair they be taxed. What about disability buyout policies?
Those are handled just like individually purchased policies.
Okay.
So premiums aren't deductible, but the benefits, they're tax-free for whoever receives them.
So the partner who's getting that buyout money, no taxes on that.
Exactly. And lastly, key person disability insurance follows the same tax rules as individual policies. No deduction for the premiums, but the benefits are tax-free.
Wow. I think we've covered everything. We really dug deep today. We learned about different types of disability insurance, government programs, all those complex policy terms, the riders, even how the taxes work.
Yeah, we really hit it all.
Hopefully everyone listening feels a lot more informed now, better equipped to make those decisions about their own disability insurance needs. But remember, this is just the starting point.
Right. There's always more to learn. So keep digging, explore the options, maybe even talk to a financial advisor to get some personalized advice.
Great advice. Because as we saw today, This stuff can get pretty complex. But being informed, that's the key to making smart choices about your financial future. Thanks for joining us for this deep dive into disability income insurance. We'll see you next time.